Hello, everyone. Welcome back to Wall Street Silver. I'm Ivan Bayuki. Our guest today is Peter Boockvar. He is the Chief Investment Officer at the Bleakley Advisory Group. Welcome back, sir.
Thanks for having me. Appreciate it.
Yeah, absolutely. It's always great having you on. Peter, we have all of these major banks and economists. They're saying that we're not in a recession currently. With all that you're seeing in the market, are we already in a global recession? What's your opinion?
Well, I think we essentially are, whether it's technical or not. Obviously, we only know in retrospect when we look back at GDP numbers and employment. But I think it's fair to say that Europe is probably in one. And if the Atlanta Fed is right in the US, that second quarter will see zero growth on the heels of minus growth in the first quarter, then you can say that with confidence that we are likely in one or at least on the cusp of one. But either way, whether we're growing 1%, no growth, or minus one, it's all going to feel the same.
Did you find it odd, Peter, that no mainstream media is talking, or no mainstream media outlet is talking about gold? Like, we have cryptos crashing and we have the economy uh, basically on the verge of a collapse. Why aren't more mainstream economists or more mainstream outlets talking about gold?
I think it could be for a few reasons. I think number one, most still don't understand it. They don't understand its purpose and why it has survived 5,000 years. I like to say, like, 5,000 years is a long time,
Yeah.
and you sort of you've been through a lot if you're around for 5,000 years. And when you are still around after that, it proves your mettle. No pun intended. I think one of the other reasons that it's sort of brushed aside is just because the action has been very choppy here. I mean, it's sort of pitched as this inflation hedge,
Right.
and we've seen 40-year highs in inflation the last couple of years, and it's really underperformed, particularly silver. I mean, silver has been a major disappointment in terms of its action.
Right.
I will say, though, that when prices are much higher from here, that will catch attention, and that's when they'll all talk about it. But that's when you need to start thinking about selling it rather than buying it.
Like, when is the current state of things in the economy going to be reflected in gold and silver? Do you think another year, 2 years out?
Well, I do have to say, with gold, with everything that you've thrown at it the last year in terms of the dollar rally, particularly over the last couple of months, where that rally has broadened out in terms of its behavior against other currencies, but also the sharp rise in interest rates, and gold still trades between $1,800 and $1,900. Obviously, it ticked above 2,000 a few years ago, but
Mhm.
in that context, it still hangs in pretty well. Silver, of course, has more underperformed relative to that, but gold's traded pretty well. I do think that once you start to see more evidence of that recession, then I think you could start to see better performance, because that will then imply that the Fed will be closer to the end of this aggressive rate hiking cycle than not, even though they still talk tough, even though the Fed funds futures market still prices in about a 3.75 Fed funds rate
Mhm.
by this time next year. Because I think that at the end of the day, the market is rightly going to think that the Fed will have weak knees when the unemployment rate starts to rise. Like right now, it's all inflation, inflation, inflation,
Right.
which in a way they can afford to put their chips on that hand, because the unemployment rate's still below 4%. But once the unemployment rate's 4.5 or 5, then you can be sure that that conversation within the Fed starts to change, even if inflation is well above its 2% target.
So you believe the second the unemployment rate hits 4.5 or 5%, do you believe the Fed will start to pivot?
Well, yes. Now we may not even have to wait for that, but I do think that that would be a signpost, I think, for the Fed to start more balancing the inflation and unemployment discussion.
Mhm.
Again, when inflation is low, they can go hog wild on trying to achieve their employment goals. When inflation is high, they need to put that aside and focus on inflation if the unemployment rate is very low as it is. I think either way, the end result is still going to be the same. And I still believe that the trend over the last 40 years of every subsequent rate hiking cycle topping out below its previous peak will likely hold. And if it doesn't, only slightly. And it was the fourth quarter 2018 that the Fed got to 2.25, 2.5. So yeah, can we get to 2.5, 2.75, maybe even touch 3, maybe, but it's highly unlikely it's going to get much above that because of the economic reaction to inflation, to these interest rate hikes. And also at the same time as quantitative tightening gets deeper into it,
Right.
and maxes out in September, and the impact that's going to have on asset prices and in turn economic activity.
Peter, in your opinion, are all these crises happening around the world? Are they leading to a global reset? And if so, will the people accept a central bank digital currency? In your opinion?
Well, I guess you're implying that a global reset would be on the monetary side.
Right.
So I think right now people's imaginations aren't that big in thinking of what follows, because most people just think what follows is just the same as what was or
Yeah.
what is. So to think that there's sort of this new Bretton Woods of some sort, I think remains to be seen. I think we need one for sure, and I think we will have lost an incredible opportunity if the behavior of the Fed and other central bankers are not altered from this experience. If we get through this and it's just same old, then we've absolutely learned nothing, and there'll be no global reset. The thing about a global reset implies that human nature is all of a sudden going to change, and institutional groupthink is somehow going to change.
Right.
And yeah, Bretton Woods changed. We went off the gold standard in 71, but there were multi-decade intervals in between, and maybe 50 years later we're due for it. It would be nice, but as long as the current crop of very conventional thinking is still in place, it's hard to think we'll get much of that reset, unfortunately.
Mm-hmm. So how do you, Peter, how do you personally navigate through this market? Like, what are you investing in other than gold and silver?
So I manage two strategies at Leakly, in addition to in the context of a broader asset allocation that we have for clients. One of my strategies is a global macro, and about a third of it has been focused on sort of inflation-related investments, whether that is gold and silver or
Mm-hmm.
energy stocks or uranium. I am not in ag anymore. I did lighten up on, where I did sell out of the fertilizer names after the war started in late February into March, and you got that spike. I'm not in the industrial metals anymore, but I still like the space generally. I think commodities over the coming years and will continue to do well relative to other things. The demand side in this recession is going to impact things. I mean, even in ag, which is sort of much more insulated from a recession, since people
Mm-hmm.
still have to eat, you do have a price sensitivity on the part of farmers. And I think we have seen some demand destruction with very high fertilizer prices.
What's
Outside
your
of that, it's just being in deep value stuff that is already have very low expectations embedded in them. And if you're going to be in fixed income, on one hand, the world's been begging for interest rates, for
right?
those that invest in bonds for the last couple of years. And now we finally have interest rates that have a plus sign in front of them, and that have, while it's still well below the rate of inflation, it's still much higher interest rates than what we've seen. So if you're a bond investor, there's some decent opportunities, but quality is most important. But having short duration is pretty important as well. But there is a painful transition period between being in bonds that are suffering through this price decline,
Right.
and before you start benefiting from this rise in rates.
And looking at silver, our favorite subject, do you have any price predictions, short term and long term, for silver?
Well, short term, silver is trading between 21 and call it 27. It's been in this very wide range after
Sad.
the spike of 2020, and it's frustratingly unable to sort of break out of that. And now we are at the lower end of that. I'm still very bullish on it. I just think silver is just this unique metal that marries the industrial demand that is now pretty exciting with
Hmm.
the shift to renewables, particularly with solar, its use in electronic products. It's still high demand for jewelry, and of course, being a monetary metal. So yeah, there's some days where it trades like with copper, but most other days it'll trade with gold. And there's no doubt that the rise in the dollar, as I said, and the sharp increase in interest rates has been a major depressant, even in the face of high inflation.
Right.
But I think that, and with respect to the dollar, and this gets back to where gold and silver can go, I hope and I wonder whether the day last week when the Swiss National Bank surprised the markets and raised by 50 basis points from
Right.
minus 75 to minus 25, that resulted in a pretty sharp rise in the Swiss franc, and that actually led to a broad rally in the dollar before it gave some of it back in the day after. Whether that was sort of an inflection point in the sense of when you look back the last year, the dollar really is only trading, it seems, on interest rate differentials and the Fed being quicker to the tightening button than
Right.
others. Now, up until a month or two ago, that was only really working against the pound, the yen, and the euro, whereas commodity currencies were trading much better against the dollar, to the point where just recently the Brazilian real was at a multi-year high against the US dollar. So if it's the case that it's really just an interest rate differential thing, and you have even the Swiss National Bank that is saying, okay, we got to get out of this negative rate situation, and we know
Right.
the ECB is going to raise in July, they'll raise in September, and they'll get out of negative rates. That maybe that yield benefit that the dollar has had is not so much, and that maybe last week's dollar action is sign of a dollar topping, and that, like I said, that Swiss National Bank date could be at that inflection point. Now we'll have to see. I'm just throwing this out there as
Right.
something that I'm looking at and everyone should look at, because if it is the case, then you will then take away one of those barriers to further, an upside move here in gold and silver.
Yeah, that's what we believe at Wall Street Silver too. The second the USD starts coming down, you'll start seeing precious metals go up. What are your thoughts on the pressure and volatility in the crypto space the past week? Do you believe with all the volatility, people will start shifting to a safer asset like gold and silver after what we've seen this week? I
I
hope
think
so.
so. I hope so. It depends on sort of what generation you were in, right?
Right.
You know, theoretically, Bitcoin was created for the same reason that gold was founded. It's let's have money that is somewhat, when I don't want to say finite in the production of gold. It's obviously not finite, but hard to mine.
Right.
Bitcoin is tough to mine, and until you get to 21 million coins, there's still going to be about 2% supply growth over the coming years. So they were both sort of created under the same premise. The issue with Bitcoin is that it's only 13 years old, and as we said, gold's 5,000. So 13 years, you're still a kid, and you still have a lot to prove,
Right.
and you still have to prove that you're going to mature in a certain way, and mature to the point that to give reason why you were created to begin with. And so what was a good idea with Bitcoin, theoretically and certainly technologically, became just a speculative instrument that benefited from QE and negative rates and zero rates. I mean, that's the life that Bitcoin has lived,
Right.
is QE and cheap money. That's the only real life it's led. But now that life is beginning to change, and we see how it's behaving. I hope at some point it can separate itself from being not digital gold. It's really become digital QQQ is what it's become, and maybe actually be a form of digital gold. I laugh when people, over the last couple of years told me it was going to replace it. That was absolute nonsense. But I did say it can complement it in some way.
Right.
But now now it's being tested and it has to prove itself. And we'll see. Now we have clearly seen that a lot of coins are going by the wayside, and they just became just speculative Ponzi schemes. Whereas Bitcoin was created for a particular reason, and let's see it now live up to that billing.
Right. Well, Peter, we want to say thank you so much. We truly appreciate you coming back to talk to us, and hopefully we can talk to you soon.
Yep, anytime. Look forward to it, and we'll see you next time.
All right, take care.